Question 1. Scenario-based. Mr. Anderson owns a small business in North Dakota and purchased a commercial general liability (CGL) policy. One of his employees, while working on a client's property, accidentally caused property damage. The client now demands compensation for the damage. Which part of the CGL policy will respond to this claim? A. Coverage bodily injury and property damage. B. Coverage B. Personal and advertising injury. C. Coverage C. Medical payments. D. Supplementary payments. Answer A. Coverage bodily injury and property damage. Explanation. Coverage of the CGL policy covers bodily injury and property damage that the insured is legally obligated to pay due to an occurrence such as the accidental damage caused by Mr. Anderson's employee. Coverage B pertains to personal and advertising injury, while Coverage C covers medical payments for injuries regardless of fault. Supplementary payments cover defense costs and other expenses but do not directly pay for the liability itself. North Dakota follows standard CGL policy structures for such claims. Question 2. Which of the following accurately describes the purpose of coinsurance in a commercial property policy? A. To require the insured to cover a percentage of the loss with out-of-pocket expenses. B. To encourage the insured to purchase adequate coverage for their property by imposing a penalty for underinsurance. C. To limit the insurer's liability in the event of a partial loss. D. To allow the insured to pay a portion of the premium as coinsurance and share the risk with the insurer. Answer. B. To encourage the insured to purchase adequate coverage for their property by imposing a penalty for underinsurance. Explanation. Coinsurance is a common provision in commercial property policies designed to ensure that policyholders insure their property to a certain percentage of its value, usually 80%, 90%, or 100%. If the policyholder fails to meet this requirement, they may face a coinsurance penalty, reducing the payout in the event of a loss. It does not involve out-of-pocket expenses for each loss or sharing of the premium, but rather imposes penalties for insufficient insurance coverage. This promotes proper coverage and reduces the risk of underinsurance. Question 3. Under North Dakota's financial responsibility laws, what minimum liability limits must an auto insurance policy provide for bodily injury per person, bodily injury per accident, and property damage? A. $25,000, $50,000, $25,000. B. $30,000, $60,000, $25,000. C. $25,000, $50,000, $30,000. D. $50,000, $100,000, $50,000. Answer A. $25,000, $50,000, $25,000. Explanation. In North Dakota, drivers are required to maintain minimum liability coverage of $25,000 for bodily injury per person, $50,000 for bodily injury per accident, and $25,000 for property damage. These limits are set to ensure that individuals involved in an accident have financial protection. Failure to meet these minimum limits can result in penalties such as fines or license suspension under North Dakota's financial responsibility laws. Question 4. Scenario-based. Ms. Harper owns a commercial building in North Dakota that is insured under a commercial property policy. After a partial fire loss, it is discovered that the building was underinsured, covering only 50% of its value. Her policy includes an 80% coinsurance clause. If the building is valued at $500,000 and the partial loss amounts to $100,000, how much will the insurer pay? A. $50,000. B. $62,500. C. $80,000. D. $100,000. Answer B. $62,500. Explanation. Since the policy has an 80% coinsurance clause, Ms. Harper was required to insure the building for at least 80% of its value, $400,000. However, she only insured it for $250,000, which is 50% of the building's value. The insurer will only pay a proportionate amount of the loss based on the amount of insurance carried divided by the required insurance. The formula is payment where insurance carried insurance required X loss. Payment were $250,000 for $100,000 x 100. This is equal $62,500. Thus, the insurer will pay $62,500. Question 5. Which of the following is an exclusion under the North Dakota Workers' Compensation Insurance Policy? A. Medical benefits for work-related injuries. B. Temporary total disability benefits. C. Injuries caused by intoxication or drug use. D. Permanent partial disability benefits. Answer C. Injuries caused by intoxication or drug use. Explanation: North Dakota's workers' compensation insurance covers medical expenses and disability benefits for work-related injuries or diseases. However, injuries that occur due to the worker's intoxication or use of illegal drugs are generally excluded from coverage. The policy provides medical benefits, temporary and permanent disability benefits, and death benefits, but it does not cover injuries caused by employee misconduct, such as intoxication or illegal drug use. Question 6. Under Personal Auto Policy (PAP) in North Dakota, how is damage to the insured vehicle from a collision with an object? G. A tree covered. A. Under liability coverage. B. Under comprehensive coverage. C. Under collision coverage. D. Under uninsured underinsured motorists coverage. Answer: C. Under collision coverage. Explanation: Collision coverage in a personal auto policy covers damage to the insured vehicle caused by a collision with another vehicle or object, such as hitting a tree. Comprehensive coverage, on the other hand, covers non-collision events such as theft, vandalism, or natural disasters. Liability coverage applies to damage or injury caused to others, while uninsured underinsured motorist coverage addresses damages caused by drivers who lack sufficient insurance. In this case, the damage would be paid under collision coverage. Question 7. Which of the following is not a purpose of the North Dakota Insurance Guarantee Association? A. To protect policyholders in the event of insurer insolvency. B. To provide financial assistance to insurers experiencing liquidity issues. C. To pay claims of policyholders with insolvent insurers. D. To prevent financial loss to claimants if an insurer becomes insolvent. Answer: B. To provide financial assistance to insurers experiencing liquidity issues. Explanation: The North Dakota Insurance Guarantee Association exists to protect policyholders and claimants by paying covered claims if an insurer becomes insolvent. However, the association does not provide financial assistance to insurers with liquidity issues or help them avoid insolvency. Its primary role is to ensure that policyholders and claimants receive compensation for valid claims when an insurer is unable to fulfill its obligations. Question 8. When does North Dakota law require that an auto insurance policy provide coverage for uninsured motorists? A. Only when the insured driver is at fault. B. Only when the uninsured motorist is at fault. C. Regardless of fault if the uninsured motorist causes injury to the insured. D. When the insurer cannot determine which party is at fault. Answer: C. Regardless of fault if the uninsured motorist causes injury to the insured. Explanation: North Dakota requires that auto insurance policies include coverage for uninsured motorists to protect the insured in the event they are injured by a driver who has no insurance. This coverage applies when the uninsured driver is at fault for the accident, providing financial protection to the insured for bodily injuries. This is a key component of the state's auto insurance laws, ensuring that individuals are not left without compensation when an at-fault driver is uninsured. Question 9. Scenario-based. Mr. Thomas, a farmer in North Dakota, has farm property insurance. After a storm damages his barn, he discovers that he failed to disclose several updates to his property during his last policy renewal. His insurer now refuses to pay the full claim. Which of the following insurance principles is most relevant to this situation? A. Subrogation. B. Utmost good faith. C. Pro rata sharing. D. Contribution. Answer: B. Utmost good faith. Explanation: The principle of utmost good faith requires both parties in an insurance contract to act honestly and disclose all material facts. In this case, Mr. Thomas failed to disclose updates to his property which could affect the insurer's risk assessment and premium calculations. As a result, the insurer may have grounds to deny part or all of the claim. The principles of subrogation, pro rata sharing, and contribution are not directly applicable to this situation. Question 10. Which of the following describes the aggregate limit ECA commercial general liability CGL policy? A. The maximum amount payable per occurrence. B. The maximum amount payable for all claims during the policy period. C. The maximum amount payable for a single claimant. D. The total amount of supplementary payments made. Answer: B. The maximum amount payable for all claims during the policy period. Explanation: The aggregate limit in a CGL policy is the total amount the insurer will pay for all covered claims during the policy period. Once this limit is reached, the insurer is no longer obligated to pay for any additional claims. This limit contrasts with the per occurrence limit, which applies to each individual claim. The aggregate limit is a key concept in liability insurance, ensuring that coverage is not unlimited over the policy term. Question 11. Which of the following best describes the purpose of the North Dakota Value Policy Law? A. It requires insurers to value a property before issuing a policy. B. It mandates that insurers pay the full policy limit in the event of a total loss. C. It allows policyholders to adjust coverage values during the policy period. D. It gives insurers the right to refuse claims based on market value fluctuations. Answer: B. It mandates that insurers pay the full policy limit in the event of a total loss. Explanation: North Dakota's value policy law requires that in the event of a total loss, the insurer must pay the full amount of insurance specified in the policy. This law is designed to simplify claims handling by providing certainty about the amount that will be paid for total losses, rather than requiring further negotiations or appraisals of the actual value at the time of loss. Question 12. Which of the following coverages is mandatory under North Dakota's personal auto policy? A. Collision coverage. B. Comprehensive coverage. C. Liability coverage. D. Rental car reimbursement coverage. Answer: C. Liability coverage. Explanation: Liability coverage is mandatory under North Dakota law for all auto insurance policies. It covers bodily injury and property damage to others in the event the insured is at fault in an accident. Collision and comprehensive coverages are optional, providing protection for damages to the insured's own vehicle. Rental car reimbursement coverage is also optional and typically offered as an endorsement. Question 13. In a North Dakota homeowners insurance policy, which of the following is typically excluded under a standard named perils policy? A. Fire damage. B. Theft of personal property. C. Water damage due to flooding. D. Windstorm damage. Answer: C. Water damage due to flooding. Explanation: Flood damage is typically excluded from standard homeowners insurance policies and requires a separate flood insurance policy, often provided through the National Flood Insurance Program (NFIP). Perils like fire, theft, and windstorm damage are commonly covered under a standard named perils policy. Question 14. Which type of North Dakota insurance policy would cover claims arising from an employee's work-related illness or injury? A. Commercial general liability (CGL) insurance. B. Workers' compensation insurance. C. Disability income insurance. D. Business auto insurance. Answer: B. Workers' compensation insurance. Explanation: Workers' compensation insurance is mandatory in North Dakota and covers employees for work-related injuries or illnesses. It provides benefits such as medical treatment and wage replacement, regardless of fault. CGL insurance covers third-party liability claims, while disability income insurance provides income replacement, and business auto insurance covers vehicles used for business purposes. Question 15. Scenario-based. A North Dakota business owner has a business owner's policy BOP that includes business income coverage. After fire damages the building, the business is forced to shut down for repairs. The owner claims for lost income, but the insurer denies part of the claim, citing that the repairs took longer than normal due to the owner's delays. What principle is the insurer likely relying on to deny part of the claim? A. Coinsurance. B. Reasonable time to restore. C. Replacement cost valuation. D. Subrogation. Answer: B. Reasonable time to restore. Explanation: Business income coverage under BOP provides compensation for lost income during the period of restoration, which is the time reasonably necessary to repair or replace the damaged property. If delays in the repair process are due to the insured's actions or inactions, the insurer may limit the payout to cover only the income lost during a reasonable period of restoration. Question 16. Under North Dakota law, which of the following parties is responsible for determining the premium rates for insurance policies? A. The North Dakota Insurance Commissioner. B. The individual insurance companies. C. The National Association of Insurance Commissioners (NAIC). D. The North Dakota Legislature. Answer: B. The individual insurance companies. Explanation: In North Dakota, individual insurance companies are responsible for setting their own premium rates, subject to regulatory oversight. The insurance commissioner ensures that rates are not excessive, inadequate, or unfairly discriminatory. The NAIC provides model regulations and guidance, but it does not set rates. The state legislature passes laws governing insurance, but it does not directly set premium rates. Question 17. Which of the following is true about the North Dakota Fair Access to Insurance Requirements FAIR Plan? A. It guarantees insurance coverage to high-risk applicants. B. It provides insurance only for natural disasters. C. It requires insurers to offer coverage at discounted rates. D. It is only available for commercial properties. Answer A. It guarantees insurance coverage to high-risk applicants. Explanation. The North Dakota FAIR plan provides access to property insurance for individuals and businesses who cannot obtain coverage in the standard market due to high risk. It ensures that coverage is available, although rates may be higher than for standard policies. The plan is designed to address the needs of those in areas prone to higher risks, such as inner cities or regions susceptible to certain natural disasters. Question 18. In North Dakota, what is the minimum level of liability insurance required for bodily injury to one person in an auto accident? A. $25,000. B. $50,000. C. $100,000. D. $15,000. Answer A. $25,000. Explanation. North Dakota law requires all drivers to carry minimum auto liability insurance coverage of $25,000 for bodily injury to one person, $50,000 for bodily injury to two or more people, and $25,000 for property damage. This ensures that drivers have sufficient coverage to pay for injuries they cause to others in an accident. Question 19. Which of the following is true about underinsured motorist coverage in North Dakota? A. It is mandatory under state law. B. It covers damages when the at-fault driver has no insurance. C. It covers damages when the at-fault driver's insurance is insufficient to cover the total damages. D. It covers the insured's vehicle for physical damage. Answer C. It covers damages when the at-fault driver's insurance is insufficient to cover the total damages. Explanation. Underinsured motorist coverage in North Dakota applies when the at-fault driver's insurance limits are not high enough to cover the full extent of damages caused in an accident. It helps the insured recover the remaining costs up to the policy limits. Uninsured motorist coverage, in contrast, applies when the at-fault driver has no insurance at all. Question 20, scenario-based. Mr. Andrews operates a small trucking business in North Dakota. One of his drivers causes an accident while transporting goods, resulting in injuries to a third party. Mr. Andrews is sued for negligence. Which insurance coverage would respond to this claim? A. Commercial general liability (CGL). B. Commercial auto liability. C. Workers' compensation. D. Inland marine insurance. Answer B. Commercial auto liability. Explanation. Commercial auto liability insurance covers liability for bodily injury and property damage caused by vehicles used for business purposes. In this case, the driver caused an accident while transporting goods, making the commercial auto liability policy the appropriate coverage. CGL covers general business liabilities, while workers' compensation covers employee injuries, and inland marine insurance covers movable property and goods in transit. Question 21. Which of the following is true about North Dakota's no-fault auto insurance system? A. It only applies to uninsured drivers. B. It requires drivers to have personal injury protection (PIP) coverage. C. It allows drivers to sue for pain and suffering in all auto accidents. D. It does not cover medical expenses after an accident. Answer B. It requires drivers to have personal injury protection (PIP) coverage. Explanation. North Dakota operates under no-fault auto insurance system, meaning that drivers are required to carry personal injury protection (PIP) coverage to pay for their own medical expenses, regardless of who was at fault in an accident. This system limits the ability to sue for damages like pain and suffering unless certain thresholds are met, such as serious injuries or high medical costs. Question 22. Under North Dakota law, how many days' notice must an insurer give a policyholder before cancelling a homeowner's policy for non-payment of premium? A. 10 days. B. 15 days. C. 30 days. D. 45 days. Answer A. 10 days. Explanation. In North Dakota, insurers must provide at least 10 days' notice to a policyholder before cancelling a homeowner's insurance policy for non-payment of premiums. This short period is designed to give the policyholder a chance to make the payment before the policy is cancelled. Other reasons for cancellation or non-renewal may require longer notice periods. Question 23. Which of the following perils is typically covered under North Dakota commercial property insurance policy? A. Earthquake. B. Flood. C. Fire. D. Nuclear hazard. Answer C. Fire. Explanation. A standard commercial property insurance policy in North Dakota typically covers common perils such as fire, windstorm, and vandalism. However, specialized perils like earthquakes, floods, and nuclear hazards are usually excluded and require additional coverage through endorsements or separate policies. Question 24. Which of the following situations would most likely be covered by a North Dakota Employment Practices Liability Insurance policy? A. An employee sues for a work-related injury. B. A third party is injured on the business premises. C. A former employee files a lawsuit for wrongful termination. D. A business owner faces fines for regulatory violations. Answer: C. A former employee files a lawsuit for wrongful termination. Explanation: Employment Practices Liability Insurance provides coverage for claims made by employees regarding employment-related issues such as wrongful termination, discrimination, or harassment. It does not cover work-related injuries, which are covered by workers' compensation, or third-party injuries, covered by general liability. Question 25. In North Dakota, which type of policy is designed to protect professionals, such as doctors or lawyers, from liability related to their services? A. Commercial general liability (CGL) insurance. B. Professional liability insurance. C. Workers' compensation insurance. D. Directors and officers (DO) insurance. Answer: B. Professional liability insurance. Explanation: Professional liability insurance, also known as errors and omissions insurance, protects professionals such as doctors, lawyers, and consultants from claims of negligence or malpractice related to the services they provide. It is distinct from commercial general liability, which covers general business risks. Question 26. Which of the following is required for an insurer to legally operate and sell insurance in North Dakota? A. A certificate of authority. B. A bond of indemnity. C. A reinsurance agreement. D. A claims settlement license. Answer: A. A certificate of authority. Explanation: In North Dakota, as in all states, an insurer must obtain a certificate of authority from the state insurance department to legally operate and sell insurance. This ensures that the insurer complies with state regulations and financial requirements. A bond of indemnity and reinsurance agreements are separate elements related to specific financial protections, while a claims settlement license applies to adjusters. Question 27. Which North Dakota policy provision allows the insurer to step in and recover losses from a third party after paying a claim to the insured? A. Waiver of premium. B. Subrogation. C. Indemnity. D. Salvage rights. Answer: B. Subrogation. Explanation: Subrogation is a policy provision that allows an insurer to recover the amount it has paid to the insured by pursuing a claim against a third party responsible for the loss. This helps the insurer recoup costs when another party is legally liable. Salvage rights apply when the insurer takes possession of damaged property, and indemnity refers to the principle of restoring the insured to their pre-loss condition. Question 20. In North Dakota, what is the minimum required liability coverage for property damage in an auto accident? A. $15,000. B. $25,000. C. $50,000. D. $100,000. Answer: B. $25,000. Explanation: North Dakota's minimum required auto liability coverage for property damage is $25,000. This coverage helps pay for damage to another person's property, such as their vehicle or other personal property, in the event of an accident where the insured is at fault. Question 29. Which of the following statements is true regarding uninsured motorist coverage in North Dakota? A. Is optional but highly recommended. B. It only covers injuries to the insured's passengers. C. It is required by state law. D. It only applies if the insured is at fault in an accident. Answer: C. It is required by state law. Explanation: North Dakota requires all drivers to carry uninsured motorist coverage, which protects them in the event they are involved in an accident with a driver who does not have insurance. It covers bodily injury damages that the at-fault uninsured driver would have been responsible for. Question 30. Scenario-based. A North Dakota restaurant owner has business interruption insurance as part of their commercial property policy. After severe storm damages the building, the restaurant must close for repairs. The repairs take 4 months, but the insurer only pays for 3 months of lost income, arguing that the owner could have completed repairs sooner if they had acted more quickly. Which policy term is the insurer likely relying on to limit the payout? A. Deductible clause. B. Period of restoration. C. Coinsurance clause. D. Exclusion for wind damage. Answer: B. Period of restoration. Explanation: Business interruption insurance typically covers lost income for the period of restoration, which is the time reasonably required to repair or replace damaged property. If the insured delays repairs unnecessarily, the insurer may limit coverage to the income lost during the reasonable restoration period. The deductible clause refers to the portion of the loss the insured must pay, while coinsurance deals with the sharing of risk between the insurer and the insured.